Hey everyone, George here. So as we wrap up the year, I want to go over your retirement plan options and contribution limits by plan type, because it might be wise and beneficial if you have some extra cash laying around and need some extra deductions to stash away some amounts and take the deduction. Obviously, it's great for two things. Number one, it's a straight tax deduction, whatever you put away, you defer that income. And number two, it's a way to build wealth. It's one of the greatest wealth building tools. So in today's episode, we'll go over all of the retirement plan options you have for 2025, the contribution limits, and everything to get your contractor business running even leaner. So number one plan type is a solo 401k, and this is perfect if you're a solo operator and possibly you have a spouse employee, but that's about it. As soon as you have an employee other than your spouse, you actually need to stop making contributions to that plan. So this is really for those contractors who are solo operators. And the employee contribution deferral limit is $23,500 for 2025. And this year there's both a catch-up and a super catch-up. So the catch-up is if you're between the ages of 50 to 59 or 64 and above, that extra catch-up along with the employee deferral gets you to $31,000. The super catch-up is if you're between the ages of 60 to 63. The deferral and the super catch-up gets you to $34,750 for 2025. And the employer portion is basically capped at $46,500. However, it would also be limited at 25% of your self-employment earnings, which if you're an S corp are your W-2 wages. And if you're a single member LLC or sole proprietorship, that'll be basically your taxable income, your net income. That's subject to self-employment taxes. Anyways, so $46,500 is the employer portion cap, plus any employee portion deferral, plus any catch-up. So if you're under the age of 50, that would cap at $70,000. If you're 50 to 59 or 64 and above, that would cap at $77,500. And if you're between the ages of 60 and 63, that would cap at $81,250. So again, even though there's employee deferral amount, the employer portion amount, you just have to make sure the numbers all divvy up such that you can max it out. For example, for the employee deferral amount, you do need to payroll yourself at minimum that $23,500 if you were to defer that $23,500. Also, for the employer contribution amounts, it's capped at the lesser of 25% of your earnings, self-employment earnings, or all the way up to $46,500. One last thing to note with the solo 401k is you need to have the plan actually set up by December 31 of 2025. The employee deferral portion, you need to pay that by December 31, 2025, running through payroll. However, the employer contribution portion, that 25% cap limit, that one you can defer up until the filing of the tax return, assuming it's a timely filing, either by March 15, April 15 for S corp or LLC, or you can extend it and make it by the September 15, October 15 deadline. Once you're past that extension deadline, it will be too late. So again, the employee deferral portion, you do need to make that payroll in 2025, and the plan does need to be set up in 2025. The employer portion can be made up until the timely filing of the tax return. Now, next one is the SEP IRA. This one's a lot more simple and a lot more flexible. It's basically 25% of your self-employment earnings again. So if you're an S corp, that's your W-2 wages. If you're an LLC, that's the number closest to that is your bottom line, your take home, which approximates your taxable income. And it's capped at 25% of your self-employment earnings, and completely capped out at $70,000. So if your self-employment earnings are $280,000, you can make that $70,000 contribution, directly. The one caveat with this is if you have employees, other people working for you, you actually need to make contributions to their SEP IRA in the same percentage as you're making to yours. You can't technically you can't make it to yours and not make it to your employees. So SEP IRA is really simple and easy to set up. Doesn't entail all the paperwork that a solo 401k or regular 401k plan might entail. It's very quick to set up. And the nice thing with this is you can make the contribution all the way up until the timely filing of the tax return, whether that's March, April, or September, October. Next up is a simple IRA, and this one is great for growing teams. If you have employees but you don't want the complexities of setting up a 401k plan and having to do employer contribution and all that. So the employee deferral amount for a simple IRA is $16,000. If they're 50 or older, there's an extra $3,500 catch up, and you can do an employer match up to 3% of compensation. Again, this one is nice in that it's very easy to set up and administer, not a whole lot of paperwork involved. And finally, we get to my favorite one, which is the defined benefit pension plan. Now, this is for real high earners. In 2025, you can defer up to $280,000 of your income dollar for dollar into your own defined benefit pension plan. But I'm going to want to warn you on this. This can only work if you're the only employee at your entity, or if you have another entity that you're the only employee and you have there's a controlling interest greater than 20%. That is someone other than you or your spouse. So again, this one, dollar for dollar, you can contribute up to $280,000. It is a little bit complicated to set up. You need an actuary to set it up for you, and every year you need to get an actuarial analysis done based on your age, income, retirement goals, all that. So it is a little more complicated, but for the high earner that is pretty much a solopreneur, this is definitely a no-brainer. Finally, I want to go over some new tax credits that are involved in setting up and administering these plans. Under Secure 2.0, small businesses can now qualify for up to $15,000 in planned startup credits, which you'd have to defer over 3 years. Up to $1,000 per employee for employer contributions, and the $500 per year credit for automatic enrollment. So if you've got even one eligible employee, don't sleep on these. They can bring your costs to setting up the plan and administering it down to like net zero. I know that was a lot to cover and we went kind of fast. If you have any questions, please feel free to reach out. My link is down in the show notes, and I hope you found this helpful. Click like, subscribe, turn on notifications for any updates, and we hope to see you in the next one.